Hey guys, welcome back to another episode of Future Wealth. Um, I found this article today on, you know, right here it says it all. These four stocks would have doubled your first stimulus check or better. I find this article to be one of the most disturbing one I have ever read. Um, and I will drill down on why that is because um, on my other side, I have the tickers for the four stocks that they're mentioning, which is Apple, Tesla, GME, which is GameStop, and Macy's. Okay, now we'll take a look at Apple stocks is 125. Tesla went back up a little bit today at 703. GameStop went all the way back up from way down. At one point, I remember it was like in the 30s or 40s, and it's 104 right now. And Macy's is at 1593. So let's close that. Oh, I opened too many. Okay, so let's see what they're saying here. So they're basically saying if you had invested your stimulus check the first time of $1,200, you could have doubled it. Meanwhile, the stimulus check was there supposed to be for essentials, meaning it was supposed to pay for food, necessities, pay your bills, electricity, and whatever else that you had or need to survive. But instead, an article like this is that it's telling people this is what you could have done with the stimulus money. Not eat, not pay your rent, not buy essentials, all right, your toilet paper, but instead it's telling you to invest a $1,200 stimulus check into the first one, into a Tesla stock of at its peak during the first stimulus check was almost $800. And exactly how was that supposed to double? I have no idea. So first off, the title of this MoneyWise article is just don't believe the hype, right? Second is GameStop. Oh my goodness. Yes, you could have, should have, and all the other things you could do, right? First stimulus check, $1,200. You dump it into GameStop when it was at its lowest, and it could be worth today $15,000. Articles like this is very deceiving. And for new investors, and if I didn't know any better, I would have took this as, whoa, it is a possibility, and I should have done it. I could have done it. Let me jump on the next one the next time this guy or these articles are released. It's so, I don't even have any words to say anything positive, right? I'm trying to hold back on just letting it all out. All right, so we went through Tesla. So what your $1,200 investment would be worth today is $7,958. It would have been a 563% increase. I mean, is that you like? I don't even know what to say to that. This is tough. Okay, Apple. All right, 1,200. Apple is a little more modest. All right, its shares has even a year ago. All right, let's just say the pandemic. It was a year ago in March when that all started. It was as low as 56. Yes, you could have doubled it. At a slower and more stable rate, right? But then you would have to had picked it up right at that dip in March when we first learned about the pandemic and everything was shutting down. From that day on, obviously you can see the trend. It has not skipped the beat, and it kept on going up. All right. So, Apple, more realistic. Let's see Macy's. Let's see the 1 year chart. So at the lowest in March, let's just go back to the beginning of March, right? 1 year, it was at 15. I don't foreseeing this one. I don't know how they got 1,200 invested. Will get you 3,000 today. You would have to had sold at the peak possibly. That's even then it wasn't much. Total increase of 150. I don't know. I'm not sure. I'm not sure how they got these numbers. I didn't sit down to calculate it yet. I may not even, because it just doesn't make sense to me. How this? Yeah, that's articles like this you need to stay away from. It does not do any justice to investment and building a portfolio. This is not something you would short term say, I put $1,200 and I got a 500% return. It's not saying to sell it. It's just saying how much it'll be worth today, in today's dollars. I didn't do Tesla. Let me see what Tesla looked like a year ago, right? March. Okay. That looks more realistic, right? It was at 86 at the lowest. If you bought it then, don't eat, don't pay rent, don't pay your utilities, your necessities, your dog food, cat food, baby food, diapers, toilet paper. Throw it all into the stocks. Your $1,200 in full. If you were unemployed, you got the employment check on top of that. You could have been a thousandaire, right? You could have made a couple of $1,000. Don't do it, guys. That's, as much as I'm a newbie, I would not want to go through that, because you never know. You never know. That's not how it should be purchased. It shouldn't be. Not saying for the stimulus check was there for a reason. It wasn't for you to put back into the market. But if you had extra funds to put back into the market, then you shouldn't have gotten the stimulus check to begin with. So that's the problem that we're facing now, is that this inflation is people were getting more free money than if they were to work. And I heard that across the board. It wasn't even, some people openly admit that I don't even have to go to work. I'm getting paid more in unemployment and stimulus money. Go figure, right? That's the world and the economy that we're living in today. Unfortunate as that sounds. So yeah, should have, could have, so many things I could have done as well. $1,200. I should have put $1,200 in Microsoft when I first learned about it when I was 10 years old. I should have. Internet boom, Amazon. Oh, I should have, could have. So articles like this, please stay away from them. You can read it as entertainment, as a comic, to joke about, but never. I wouldn't. That's all for today's video. Thanks, guys.